number that's flashing on your screen or on any of our social media channels. I'll also be looking at the YouTube live chat for your questions, so you can write to us there. Now, let me introduce you to the guests for today. We have with us Shahina Mukadam. She's an independent market expert, along with Nirav Chheda of Nirmal Bank Securities. Welcome, Nirav and Shahina. Hope you're good. And we'll start off with the questions in just a bit. But before that, let's take a quick look at the markets. Nifty and the benchmarks are buzzing today in green, up about 0.8%. And the broader markets, the Nifty 150 index is 0.5% up. Nifty small cap is at par with the benchmark indices. So that's how the market overall looks right now. But if we look at the Nifty 50 constituents, we have Adani Enterprises and Adani Ports taking the cake there, up. And followed by L&T and Infi, also up in trade today. Couple of losers there, ONGC along with Britannia and Ultratech. So that's how the Nifty 50 looks at this juncture. Among the sectors, Nifty IT is buzzing today, up over 1%. Actually, most of the sectors are in green today. So apart from media, that's down 2%, more than 2% actually. 3% in trade down today. That's the only losing sector. And from there, we'll go on to the focus of today, which is Zee Entertainment. Now, the stock is down 10% in trade today after media reports suggest that there may be a breakdown of the Zee Sony merger. While there is no clarity or an official word on this from either parties, that's how the market is still reacting quite negatively to the news. So, Shahina, I'm going to come to you on this. If the talks eventually break down, how does it look for Zee in particular? Doesn't look like a very positive road from here on.
I totally agree with you. In fact, I'm so disappointed. I personally hold the stock, and and for quite some time. So, though it has performed a bit in the last year or so, but for the long-term investor, it's been a very big disappointment. As an investor, what I would probably do is sell half my holdings, because this is a very risky development, and and maybe the second half, one just needs to wait and watch what happens. At the same time, I would not advise any fresh investment, because, the timeline that we're hearing, now there's no confirmed news, the timeline that we're hearing where Sony may actually say that they are not going to carry this discussion forward is pretty close, couple of days. So I think it's extremely risky, and no fresh investment I would advise at current levels.
All right, we might get clarity on this in the next couple of days. But until then, let's start off with the questions. And the first one is from Padman Bhan. I hope I'm saying that right. And he's talking about Angel One. Now, Nirav, tell us a little bit about how Angel One looks on the charts. And would you still suggest buying into the stock at this juncture?
Yeah. Hi, everyone. Thank you for having me on the show. Angel One has had a dream 3 to 6 months, actually. Ever since, it broke out above its, range. It was in consolidation for about a couple of years, and the range breakout came in around that 1700 odd levels. It has more than doubled from there, within from June 2023 to up to now. So, within 6 months, it has doubled. Even at current juncture, there is no stopping the stock. The overall pattern is still positive, and there's no topping out formation that is seen. Volumes are still sustainable. The indicators are still obviously on the overbought zone, but they're not showing signs of weakness at this point of time. So you can continue to hold on to your longs, and probably, if you get a fall up to the 3600, 3640 odd levels, Up till then, you can look to buy again. For me, the target comes to around 4,200 odd for this stock from a near-term perspective. So for that target, you can, look to hold on.
All right. Shahina, what about the longer term for Angel One? Now it has given about more than 100% returns, close to 195% returns in the last 1 year. Now, even though the fundamentals look really strong, it has come out with the earnings, the previous earnings look quite strong. But in the longer term, do you still see an upside from here on?
I believe so. I think they are got a very good tech platform, and they are doing pretty well, as you mentioned, last quarter numbers. And in terms of valuation, it is now slightly expensive, but I think any dips should be used to add positions because it looks good for the longer term. I think they are doing pretty well in terms of growth and market share.
Right. Next up, we have a question from Kailash. He's writing to us on WhatsApp from Nagpur. He's talking about Nestle. Now, he is asking a short-term view on Nestle. The stock, he says that the stock has been sliding after the split. Now, that's kind of expected when a stock split happens. But how does Nestle look on the charts, Nirav?
Yeah. See, the overall trend is positive. No doubt, there has been corporate action, and the stock from sub 25,000 odd levels has become a 2,500 odd stock. So this is expected, as you said. It can probably come back to its mean, which is around the 2,500 level, which is the 50-day moving average. So from a near-term perspective, that is a good level to buy. So if you're holding on, it is already broken down below 2610, which was a support area. So now the next real support is around the 2,500 odd level. So, look to buy again around those areas with a stop loss of 2,450.
Right. Next up, we have a question from Rakesh Panoli from Dubai. He's talking about two counters now. One is Motherson Sumi Wiring that he bought at 65 levels, and Electra Green Tech that he bought at 1,252 levels. In these two stocks, he's asking if he should continue holding these two or should book profits. Shahina, based on the fundamentals, what would you suggest?
I think both the stocks are decent stocks to be invested in for the medium to longer term. Wiring has done pretty well in terms of growth, and I think they are getting good orders also. So one can remain invested. Valuation is also pretty decent. As far as Electra Green goes, there I think, while if you look at it in the short-term valuation, it looks expensive. But since the growth, they are doubling their profitability, their turnover. So I think they've got very good order book also. So to an extent, if you're a longer-term holder, I think one can continue holding. In the medium term, it could consolidate, but, it is a stock that one can continue holding.
Right. Next up, we have a question from Mitesh. He's writing from West Bengal. He's talking about R Power, Reliance Power. Now, he wants to know if this is a good time to enter the stock. Nirav, how does it look in the charts? Would you suggest buying at this juncture? The stock is under a little bit of pressure today.
See, taking nothing into perspective, from the fundamental side, just looking at the chart, it is a screaming buy. This is one formation that you need to buy, and I do believe this stock can move up towards the 55-60 levels, and probably within no time. The overall volume profile of the stock, the overall reversal has been in place, and it is a tremendous pattern at this point of time. Just take out the name and look at the pattern. It is a beautiful pattern. So I definitely believe this is one stock which needs to be bought at current levels. Keep an appropriate stop loss of around 27 for your longs. If that goes, just exit it. But the volumes also are very terrific. Just go ahead and buy it. 55-60 are coming soon.
Right. Next up, we have a question from Siddharth from Mumbai. He's talking about Easy Trip Planners. He bought at 42 levels. The stock is trading 5% higher, around 45 levels. Now, he wants a long-term view for this. So, Shaheen, how does it look for the longer term based on the fundamentals? Easy Trip Planners.
Easy Trip Planners is one of the, I would say they're making profits even on the cash level. So it is one of the platform stocks that I like. Valuations are decent. So I think one can be invested in this stock for the longer term.
All right. Next up, we have a question on YouTube. This one's from Navadeep. He's talking about Dr. Lal Path Labs, and he wants a short to medium term view. Nirav, now we have already seen a little bit of positivity in the pharma space, but specifically on this stock, how does it look on the charts?
It's decent, but I don't think in the near term this stock will move up quite much. Probably, in the medium term it should move up, but yeah, this stock has a resistance around that 2750, 2770 zone, and that is where every time this stock keeps coming down from those levels. So until it really moves up above that 2770 odd levels, I don't think much of buying aggression will come in. So at this point of time, I would avoid the counter. I'll buy only above the breakout, and then ride a target of around 3200 to 3300 within a very near term perspective.
Would you give a stop loss if they're already holding the stock?
Yeah, the stop loss would be 2470.
Got it. Okay. Next up, we have a question from Aditi, and she's talking about Praj Industries. She's bought the stock at 428 levels, and if you look at currently the stock is faring, it's around 540 levels. Shaheen, how does it look? It looks like considerable profit for Aditi there.
Well, it's a smaller stock in the overall equity, universe. At the same time, I think there's a lot going for it because you have distillery capacity that is being added continuously. There is the government push towards increasing the composition for mix on petrol, diesel. So I think to that extent, Praj Industries does get good orders. I would continue holding the stock for the medium to longer term.
Fair. Next up, we have a question from Hemu. He's talking about Saan Life Sciences, and he wants a target for the stock. So, Nirav, any sort of 6 months or 1 year targets that you have on the stock?
Yeah, so there are two Suvains actually. One is pharma and one is a different one which is trading at 100 odd. Which one are you talking about actually?
In Life Sciences.
So I think it's the 100 one.
Yes, it's trading around 105 rupees, up about 4.5% right now.
So see, this stock has a history of long consolidations and then huge breakouts post it. So another long consolidation has taken shape. It is broken out above, and now a very important resistance is likely to be broken, which is around that 115 odd zone. Even though a near-term breakout is in place, I definitely believe 115 will come. But once 115 is broken, you might see a big move in this stock, and it can probably even double from there. So yeah, that's a longer-term perspective. From a near-term perspective, at 115, book some, wait for the breakout, and then you can probably aggressively again add this stock. You can keep a stop loss of about 96 on a trailing basis till then.
All right, we'll slip into a short break right now, but we'll take more questions on the other side. Stay tuned. Welcome back. You're watching Ask Profit. Let's begin with the queries. The next one we have is on Tata Steel. This one's from Pandhari, and his average buy price for Tata Steel is 126. He wants to know if he should continue holding the stock or should he sell it. Now, based on the fundamentals, Shahina, what's your view on Tata Steel for the longer term?
He should continue holding. You know, after the decline that we saw last year in steel prices, they're consolidating as of now. And while I feel that the stock may consolidate for some time in line, I think the demand scenario is pretty good. And it is one of the best in the ferrous space. So one should continue holding Tata Steel for the medium to longer term.
Right. And for the shorter term, Nirav, how does it look on the charts?
I think I concur with my colleague there. I believe a breakout has come in, and the breakout is above that 120 odd zone. So I think he's bought it just above the breakout level only. It can now move up towards that 150, 160 odd zone from a near-term perspective. Overall setup is still positive. Volumes are nice as well. Importantly, if you look at the derivatives data in this, the open interest is quite low, so not many people are holding it. So follow-up selling is unlikely to come in. I believe this stock is headed upwards.
All right. We're getting updates on the Zee Sony merger deal, and we have Tamanna joining us today to talk about us. Tamanna, what's happening there? We've already seen the stock tank 10%.
Yeah. So the stock has seen a big hit because of a Bloomberg story that we covered first on NDTV Profit yesterday that said that Sony is looking to call off the deal. Now, sources close to the deal have told me that good faith negotiations are very much on. So they're reiterating that the story is not closed as far as the Zee Sony merger is concerned because good faith negotiations are on. Now, technically, the last date of that deal has been extended to the 20th of January. But seen in light of what the reports were yesterday, that Sony has sort of made up its mind, it's important to note that negotiations are still on. The other part of the whole story is, and what these sources are telling me, is that the deal could still go either way. It's not a done deal one way or the other. The tussle, of course, remains that Sony is keen to go ahead with the merger. The question is about Mr. Puneet Goenka at the helm of affairs. And what they're trying to say is that Puneet Goenka is not fighting for the chair as is being portrayed, but simply wants what the shareholders have approved to be implemented. Now, if you read between the lines at the end of the day, what the shareholders have approved, and in Zee's reading of the whole matter, ends up with Puneet Goenka at the helm of affairs, something which Sony is not keen on. Having said that, this has been a point of tussle for the longest time between the two sides on the entire deal. And this is what will continue to be the issue. Another point that is being highlighted is that if this deal falls through or if it doesn't go through, it goes back to the drawing board in a sense. You go back for reapprovals to all the desks, to all the shareholders as well. So there's a lot at stake. The story is very much alive. The last word has not yet been seen on the whole Zee Sony merger. It's a tussle that's going on, and it's important for both sides, needless to say. So for Sony to also walk away very easily is not the case. They have a huge competition in the face of, after Jio has taken over Disney Hotstar. So there is a big behemoth waiting in the wings, and they need to muscle up. So Zee fits in perfectly in that sense. The question about leadership of the merged entity still remains in the balance, but negotiations are very much on.
Right. Tamanna, you rightly mentioned that just breaking down the merger based on who's going to lead, the analysts also feel that it's a lose-lose situation for both the entities. And that's rightly, if Puneet Goenka is not, is okay with stepping down, and if that's the point of kind of a fight between Sony and Zee, then
It's not as simple as saying that. So what they're reiterating is that it's not that he is keen to hold on to a chair. So they want. So the portrayal is a little different. But what that side is sticking to is what the shareholders have agreed to and what the current scheme is.
Right.
And that is what they're holding on to. Right. That work in the interest of shareholders, if you call off the deal at this stage, is going to be detrimental to shareholders. At the end of the day, you'll have to go back to the drawing board, go back through the entire process. And since this is what the shareholders have decided, why not stick to it? At the end of the day, net, if it does go through, then Puneet Goenka comes out tops.
Right, fair point, Tamanna. Thank you so much for that update. And we'll be bringing you more updates as and when we get it. And we still wait for the official word on these. Now, let's go back to queries. And this one's on Bajaj Consumer. Now, they want a short-term view on this, and they've bought the stock at 217 levels. This one's from Senthil. So, Nirav, how does it look, Bajaj Consumer, for the shorter term?
Yeah. So, from the shorter term perspective, a small flag kind of a formation was taking shape, and a breakout has come in post that. But definitely believe, this stock, the volumes are missing. And that is a big problem. And, that is why, that momentum is not coming. Still, you can hold on to this stock with a stop loss of around 219. It's a good support area. This stock can come up slowly and steadily up to the 240 to 45 zone. Once it comes there, look to book profits and go to some other stock which is aggressive. This stock isn't aggressive enough at this point of time to get very good returns.
And what about the fundamentals, Shahina? How does Bajaj Consumer look? Is there
it's a small cap in the overall space. They have got good products, definitely. But as Nirav has said, they have been a bit slow in terms of capturing the overall market. But fundamentally, I still think it looks decent. Valuations also much below the rest of the stocks in the group. So if I'm a long-term investor looking for a decent return, I would continue holding.
All right. Next up, we have a question from Sumana Mukherjee from Kolkata. And they're talking about amalgamation of TSL and Tinplate. They want to know a little bit about it. And should they enter the stock in the next 6 to 9 months? Shahina, what's your view on this one?
I didn't get the question actually. Stock?
Amalgamation of TSL and Tinplate.
Sorry, I'm not totally on top of this.
Okay.
The outcome of the amalgamation, yeah.
All right. Nirav, for the shorter term, is it a good buy in the next 6 to 9 months?
In terms of Tinplate, yes, it is a good buy. But see, again, what is happening on the fundamental front, I don't know. Volumes are missing here. I am someone who looks at the volumes very closely, and I'm very comfortable when the volumes are high, because that gives us a confirmation that the trend will, take shape and it will continue to move up. But, at this point, I can only say that breakout has come in at around 435 odd levels. It is very near to that breakout, retested it. But it can move up towards that 480-500 band. From a near-term perspective, keep very strong stop losses here. 415 should be your stop loss. If it goes below, just exit the counter.
All right. Next up, we have a question from Gargi, and he's talking about Biocon. She wants to know if it still merits a buy at this juncture. Now, if we look at the stock performance in the last 1 year, it's given about 11% gains. Nirav, would you still suggest buying the stock?
Yes, definitely. See, this stock from 2020 onwards, December onwards, has done nothing. From that sub 450 odd levels, it came down towards the 200. 3-year consolidation went in. So the consolidation period is over. This stock has broken out above very, very important level of 270 odd. A double bottom kind of a formation also took shape. So, and volumes are good. So all in all, everything is in favor of this particular company, and I believe probably in the next 3 to 6 months, this is the one pharma company which will do very well going forward. It can probably come up towards the 375, 400 band, even higher probably. So, you can continue to hold on if you want to buy. This is a good level to buy because that breakout of 270 is very near. It is just coming. So you can keep a stop loss of around 265 for your longs, and near term target would be 325, and medium term I would be holding on for 400 plus.
Right. On that note, we have to wrap up the show. We're completely out of time. Thank you so much, Shahina and Nirav, for joining us and for answering so many questions. And viewers, thanks a lot for tuning in and writing to us. But we'll be back tomorrow, same time at 11:30 a.m. Until then, stay tuned.